Let me ask you something. What if I told you that markets don't react to news anymore? They already know the news before it happens. And if that's true, then who is actually making money? For years, we believed one simple idea. News happens, then markets react. But in 2026, that model is broken. Now it looks like this. Markets move, then news comes out. Events don't move markets anymore. Events follow liquidity. And that changes everything. Because if someone knows the event before it happens, they can position themselves perfectly. And this is where insider trading quietly comes back, just in a new form. Let's go through real examples because this is not speculation anymore. Let's consider the first case, the Maduro bet. In January, something strange happened on Polymarket. A brand new account created just days before placed a bet of over $30,000 that Nicolas Maduro would be removed from office by the end of the month. At the time, the probability was extremely low. It looked like a long shot. But just hours later, the Trump administration carried out a surprise military operation capturing Maduro. And that $30,000 bet, it turned into more than $400,000 in profit. The account was newly created, only bet on Maduro-related outcomes and entered just before the event happened. This wasn't just lucky timing, it was too precise. So precise that it immediately triggered discussions in Congress about insider trading on prediction markets. Not if, but when. This trade was so suspicious that Richie Torres introduced a bill called the Public Integrity in Financial Prediction Markets Act. Now let's see the case 2. The $2 million war insider. Now it gets even deeper. In March, there were 355 active prediction markets on Polymarket tracking outcomes related to the Iran conflict. Who becomes the next leader when a nuclear deal is signed and when military strikes will happen. Basically, real-time betting on geopolitics. But here's where things get suspicious. An independent on-chain analyst, Andrew 10 GWEI, uncovered something unusual. 38 different accounts likely controlled by a single entity. Together, they made over $2 million by correctly predicting the February 28th strikes. And here's the key part. Each account placed 4 to 10 bets. The success rate was nearly 100%.
Funds were prepared days in advance, February 22nd. Bets were executed in a tight window, February 27th, between 11 and 12 Greenwich Mean Time.
Right before the strike happened. Not after, not reacting, before. This wasn't just one lucky trade. This looked like a coordinated strategy or access to information the market wasn't supposed to have. Move to case number 3, the Google Insider. Another trader turned $10,000 into $1 million. He bet on something almost impossible, a singer named D4VD becoming one of the most searched people on Google. Probability, 0.2%. Nobody expected it except someone clearly did. The strategy was insane. First, turn 10,000 into 200,000, then bet against all favorites. The community believes this wasn't luck. This was access to internal search data. Ex-user and self-proclaimed prediction market enjoyer, Jung Haeju, leveled the accusation that the trader was a Google insider, claiming the win wasn't just a lucky streak.
Google accidentally pushed the results early, then removed them, but not before it revealed he went 22/23 on his bets and ballooned to $3.9 million in open positions.
He wrote, adding that the same person made over $150,000 when he predicted the early release of Gemini 3. At this point, it's obvious he's a Google insider milking Polymarket for quick money. Now, case number 4, the $950 million oil trade. This one is huge. In April 2026, just 2.5 hours before a ceasefire announcement with Iran, someone placed a $950 million bet on oil prices going down. They sold 8,600 Brent and WTI contracts, around 1% of global daily volume. Then the news drops. Oil crashes 15% instantly. That's not a guess, that's precision. And the last but not least case, the 90-second advantage. This might be the most disturbing one. Late March. Tensions are at peak. Markets expect a strike. Then suddenly, 60 to 90 seconds before the official announcement, a trader opens a $500 million short on oil. On Polymarket, someone places $2.5 million on no, meaning no strike. Then the White House confirms strategic pause. Oil drops 8% in minutes. Millions made in seconds. So what's going on here? 3 big ideas. First, prediction markets equal legal insider trading. Platforms like Polymarket position themselves as truth discovery tools. but in reality, they may have become a legal casino for insiders. Because you can't buy defense stocks before a war, it is too obvious. But you can place a crypto bet anonymously from your phone under a blanket. Second, a new type of inequality. We used to think the gap was rich versus poor. Now it's different. Informed versus uninformed. Some people live inside the data, inside the systems, and inside the decision-making flow. Others, they read Twitter after everything already happened. Third, regulators are lost. Here's the real problem. Is this even illegal? Because technically, it's not stock trading, it's not securities, it's just betting on outcomes. So how do you punish insider trading when it doesn't look like trading? We are entering a legal gray zone where old rules don't apply anymore. And the data is already there. It is not just isolated cases. A detailed fact box by investing.com highlighted multiple suspicious trades that happened right before major policy changes by Donald Trump in March 2026. Different markets, different assets, but the same pattern. Large positions placed before public announcements, precise timing, and near perfect outcomes. At this point, it stops looking like a coincidence and starts looking like a system. So now the real question is, are markets still fair? Or are they already priced by people who know the future? Because if markets reflect information before it becomes public, then most traders are not early, they are late. This is one of the biggest shifts in modern markets, and honestly, we are just at the beginning. So tell me in the comments, do you think this is insider trading or just smart positioning? And more importantly, would you still trade knowing this?